All right, what is up, flippers? It's Marcel here. Welcome, everyone. In this video, I will break down the trade I took on GBP USD on the 4th of July. So yeah, let's just begin everything with the higher time frame breakdown all the way down to the lower time frames. I will show you the markups. So the 4-hour, 50-minute, and 5-minute markups will be shown, and I explain everything around the price action. Then I will switch to the TradingView live chart and use a replay tool to replay back the trade and show you what the entry opportunity was. And how did it play out? So first of all, starting on the 4-hour time frame, just a small explanation on what has happened here. So you know that this 4-hour supply here broke above a valuable less recent 4-hour demand, that is this one right here. After the break of this demand, price reacted on another valuable demand right here, and this demand that I'm showing you currently is the one that has caused the swing break of structure on the higher time frame. So this demand that is highlighted here caused the break of structure on this line, which broke above a recent daily or weekly structural high point. So price was reacting on this demand right here, as you can see. It is rejected on several times, but couldn't break below it. So it only went below, but there wasn't a break below this demand, so it rejected on it. And after this last candle that has been printed here, price just created an insanely huge pressure to the upside with these two bullish volume and inefficient candles. And these two candles actually indicated the reaction here on the less recent supply region that has caused the break of this less recent valuable demand. So that's what has happened here on the 4-hour time frame. This movement is rather a 50-minute movement and not a 4-hour one. On the 4-hour one, this is just a consolidation range, right? But on the 50-minute time frame, as I stated here, that it reacted on a 50-minute demand, meaning the supply will probably be weak. Why did I write it here? The reason I wrote it down is because if 4-hour supply can take out the less recent valuable 50-minute demand, the likely that 4-hour supply will be weak. And why is that? Because if that 4-hour supply is not stronger than a 50-minute opposite-sided less recent valuable demand area, then likely that 50-minute demand will be stronger than the supply, meaning the break of it will happen. So if the supply can take out the less recent valuable 50-minute demand, then, we are not really expecting the bearish continuation because it proves that the higher time frame on the supply side is weaker than the lower time frame on the demand side, meaning the demand is in control. So the current region that I will highlight for you, this one, will be shown on the 15-minute markup. So here we are on the 15-minute markup. You can see that here was the 4-hour supply rejection. After this 4-hour supply rejection, price just mitigated an unvaluable demand right here. I just explained it several times in the past forecast videos and past markups, that the reason I'm calling this demand as unvaluable is because this is only a small stop candle in the market, right? So it didn't really cause any break of structure. It did nothing literally, not even inefficiency. There wasn't even inefficiency starting from this candle, but you can see the rejection and footprint of price here, that it basically reacted on this week. And after the reaction, it just flipped this week. But after the flip, it just met with the less recent valuable demand, which is right here. And the reason we are calling this as the less recent valuable demand is because this is the one that has caused the change in the order flow right here in the 50-minute time frame, flipped a really valuable 50-minute supply in the past price action. You can see the reaction here, rejectional candle, and from this candle, the inefficient and nice volume flip has happened. So after the flip of this demand, price met with this another valuable and only valuable demand in this region and gave a rejection, right? So it gave a rejection, came back up to mitigate this supply. That was the cause of the flip of the previous demand right here. So this supply initiated the break of this demand, right? Below this supply, we can see liquidity. We can identify liquidity. This liquidity has been swept into the supply. Now, after a supply rejection, price swept the liquidity from above the supply to you. So this liquidity line has been swept out by this huge wick. So basically, price swept liquidity into the supply and swept liquidity from above the supply. But this double sweep wasn't even enough to, create a bearish order flow continuation. Instead of continuing this bearish order flow, it just reacted on the less recent demand that is located right here. And I wouldn't even call this as a valuable demand because it just only swept the liquidity, and the only purpose of this demand was to sweep this liquidity and to mitigate this supply, right? So, this is one more thing that lets us assume that the demand will be taken over control of the supplies, because this unvaluable demand was basically in control over the valuable supply. So if an unvaluable demand is holding price and the valuable supply is breaking, then likely the bullish continuation will happen to the upside. And finally, it has happened after price consolidated here for a small amount of time, for like maybe 5 hours in the Asian session. Yeah, it was exactly in the Asian session. After the consolidation, the flip of this supply has finally happened here with the body closure, right? So this body closure has been initiated by this demand here with a really nice inefficient and volume push to the upside. This demand has been mitigated right away, but it was only a low percentage mitigation, as I stated here. And I was actually either expecting the deeper mitigation or either the continuation for a higher demand region, right? So that was all stated on the markups. I was writing here that low percentage on the flip demand, continuation afterwards. So it means that we can expect a deeper mitigation or looking for another demand long here. I just marked it out because I mean I didn't mark it out on the 50-minute time frame because I just marked it out on the 5-minute one. So basically the plan here on the 50-minute time frame was to look for a demand confirmation somewhere around here, or look for the confirmation on this demand, or look for the next possible high value demand mitigation, which is this one down here, as I stated. So if this one and this one breaks, we will be able to, I mean, on this one, we will be able to take longs. On this one, we will be able to take longs. And on this one, we will be able to take longs. After the break of this less recent, I mean, not less recent, because this is not the less recent, but this is the last. This is the origin demand. So after the break of this origin demand, we can look for shorts. As I stated here, if it breaks, then we will have a nice bearish order flow. But on the 50-minute time frame, I even, wrote everything down with arrows too. So here are the arrow movements. You can clearly read everything here that, on the 50-minute time frame, this was that less recent demand that has been mitigated. And as I stated there on the 50-minute markup, only a low percentage mitigation has happened here. As I stated there, I was looking for a demand on the high region. And here, actually, we could identify a 50-minute or a 5-minute zone too. So on the 50-minute time frame, it looks like this. So basically, this was that less recent 50-minute demand region, because you can see only on this candle inefficiency. So only this candle is inefficient. There's an inefficiency in between the high and the low point. And below this one, there's no inefficiency can be found. Here's, you can see that no inefficiency in between these, in between this one and this one, there's no inefficiency. Here's no inefficiency. Basically, no inefficiency can be found here. So the only inefficiency that has been caused on the 50-minute time frame started from this candle. On the 5-minute time frame, it looks like this as a refinement. This is the refinement of that 50-minute candle, perfect refinement, right? So as on the 5-minute time frame, I stated with arrows, these were the plans we were looking for. Pretty easy plans, right? So this was the first plan, confirmation entry here for longs. If it breaks, we'll be able to take shorts all the way down to sweep out this liquidity and all the way down to target this demand, that is on the 50-minute time frame. Let me just show you. That is on the 50-minute time frame here. It's still this demand, right? Or if neither of these can happen, we will be able to take shorts all the way down to this next demand region that is also was marked on the 50-minute time frame right here. So these were the simple plans that I forecasted before the session open. And here I am on the live chart. Let's just see what has happened here. So, this was the pre-session open. And this is that 5-minute demand that I showed you. Of course, there was the refinement. This is only the refinement of the 50-minute zone, but I just used the refinement because it was much cleaner. So on the 1-minute time frame, this was the session open. I mean, this is the session open candle. What can we identify right away here? These triple bottoms. We can identify this liquidity as triple bottoms. Perfect liquidity has been built up for the demand. But if you don't want to consider this as triple bottoms, you can just simply consider this bottom as a liquidity. And the reason we can consider this bottom as a liquidity, because this is a middle of nowhere reversal, not B, but R. So this is a middle of nowhere reversal, which in itself will be liquidity for a deeper demand below it, right? So this was perfect liquidity to take for the demand below. And price right away swept this liquidity into the demand, mitigated perfectly the 50% of this demand. I will just use the Gambax tool. You will see that it was a perfect 50% mitigation. And right after a 50% mitigation, what has happened? It gave a strong rejection. Immediately, you can see that coming down, leaving this huge wick behind and coming with a V-shaped rejection, strong rejection immediately after sweeping out the liquidity and mitigating the demand. And what else can we see right here? We can see that this is the less recent supply, 1-minute supply that has caused the less recent break of structure here in the market. And of course, the mitigation of this demand. Currently, price is reacting on this supply. There's a change of character with a wick, which we can consider as a change of character, of course, because on 1-minute time frame, we consider a change of character with wick too. So this is a change of character in itself, right? So it immediately lets us use this demand as our first entry POI. Let me just close this. So it immediately lets us use this demand as our first entry POI, because this is the one that has caused the inefficiency right here, and this is the one that has caused the change of character right here on this supply. At this point, I did set a limit order here on this demand. I had a limit order floating right here, but price did not mitigate it. Instead of mitigating it, it just created a flip zone 2 with a body closure, right? So for flips, we are considering body closures. For change of characters, we are considering wicks, right? So the change of character happened here with a wick, but the flip of this supply with a body closure happened from this demand. So it immediately did put us in a situation where we could use a risk split entry. And basically, price just went up a little bit more. I just used the risk split entry on both of these areas, use the risk split right here with a 2 pip stop loss. Yeah, I just used the 2 pip stop loss because there's almost too small. And with the 2 pip stop loss, if price would have tagged me out, it would have tagged me in right here immediately. So yeah, I just used the 2 pip and I had a limit order right here immediately on the stop loss. And of course, at the beginning of this demand region. And yeah, price levitated back down to this demand, and the tag has happened here perfectly. So the tag was happening, and right after this tag, price actually didn't even went back down to drawdown. It was a perfect sniper entry tag, and yeah, it just literally blew up to the upside. At this point, I did set my stop loss to break even. After the break of this high point, I did set my stop loss to break even. And let's just talk about the target points. Let's just talk about what was I targeting. Actually, first of all, I was targeting the high region of this supply. So this 4-hour supply that was shown on the 4-hour markup, that's the first target I was targeting. I actually removed partials here. I removed 50% of the partials right here. So I'm just going to mark it the way it is. And the second target point for me was this 4-hour high point. And the third target point was this liquidity line right here. So basically, the first target point was right here for 10, exactly, almost 10 risk reward ratio. This was the first target point. This was the second, first partial point, sorry. This was the second partial point. I was planning to remove 50% off of the partial here, and not just planning, I just actually removed 50% off of the whole position size right here. And I was planning to remove 30% more, so 80% of the whole position size right here at like 20 risk reward ratio. Yeah, it was 20 risk reward ratio, 21. So basically, I was targeting this high point as my final target point, and that's why I removed 50% here. But after I saw that bullish pressure that has just happened here, which you will see in the next few minutes, I just decided that I won't remove all of my position right here, and I will just simply let it run all the way up to the last target point, which was that liquidity line. And that was like, let me just check it. On the 15-minute time frame, just a minute, sorry. So that was like 65 risk reward ratio. So that was the overall plan for me here for the partials and for the TP. And the thing that has happened here is that price continued the way up to the first partial point. You will see that. Let me just play price forward. Yeah, here at this exact minute, it just literally did hit my partial point. And this was news release also. Yeah, I believe this was news release. So I was in break even, and I was just planning to close this position right here, 50% of the whole position size right here, which I did also somewhere around here at 10 risk reward ratio. So I just booked a nice profit on this trade, 10 risk reward ratio, 50% of the whole position size removed right here. And right after this movement, right after my first partial point, price just went back down to my break-even point. Basically, after a few minutes, it went back down to my break-even point. It will be easier to see on the 15-minute time frame. Yeah, at this point, it went back to the break-even. And yeah, that's the final outcome of this trade. Booked 10 risk reward ratio, 50% partial here. Perfect trade. Basically, for me, it was a really worth trade. And yeah, once again, everything was forecasted. Literally, everything was forecasted. Just take a look at this picture. Here's the exact forecast that I showed you. Simple conformational based trade. I showed you that if price comes from this area, then you can enter in longs. If you know how to use the entry plans, and you should be able to know how to use the entry plans, how to use resplits, because that's part of the main course. That's part of the main educational topic videos, which you have to know from inside and outside. You have to know everything around those videos and around those topics, because that's the overall strategy that we are using. Then, if you knew how to use these entries, then this was a really easy trade for you. And I saw that some of you guys, and not just some of you, but many of you guys called this trade. So congratulations to anyone who called this trade. It was a really nice and clean opportunity. Yeah, simple resplit entry, because you know, there was a decisional, there was an extreme. If there's no liquidity for the decisional and there was clearly no liquidity for the decisional, then we can use a resplit entry on both of the areas, on the decisional and extreme. And that's the exact same thing I did here. So yeah, that's all about this trade. Pretty easy, pretty clean, pretty trade. So yeah, hope you liked it, hope you enjoyed it, and hope you learned something from it, because yeah, I believe you can learn from these recaps, because the way you see how I break down my trades and how I think about my trades to see my thought progress around the trades, if you keep memorizing these trades, if you keep looking at these trades over and over and over again, because I'm doing the same thing over and over and over again, basically using the exact same entry model in every single trade. If you keep watching these trade recaps, you will train your muscle memory so much. And one more thing, how you can improve much easily with these trade recaps is you see, for example, you search for a trade recap from the past, you take a look at the trade recap. I mean, sorry, no, you don't watch the trade recap. You just simply check the date that, okay, June, I don't know, 15th. You check the June 15th day, you backtest it. And if you found the exact same trade opportunity that I was showing in the trade recap, then you are pretty much making progress. So first of all, you find the trade recap, you check the date on it. Before watching the trade recap, you hop on the trading view, you backtest that day that I've made the trade recap off. And after you backtested that day, you watch the trade recap. And if it's identical, then you're making lots of progress. If it's not identical, then you should backtesting more. You should be backtesting more. You should be practicing more. And that's it, ladies and gentlemen, how you can take value of these recaps. So yeah, that's it. See you guys soon. Take care and cheers.